Child benefit is a helping hand from the UK government for many families. The tax-free payment is often used by parents to top up their income, but for some who are deemed high earners, HMRC will actually claw back that payment in the form of the high income child benefit charge. If you're thinking of or already claiming child benefit, understanding how this charge works and who is liable to pay it can help you plan ahead more effectively. In this video, we will cover a quick recap on the basics of child benefit. How does the high income benefit charge work? How is the charge applied? And finally, the non-monetary benefits of claiming child benefit. Now, before we get into today's video, make sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to create more helpful videos and to get you free quality advice from real qualified accountants. If you're responsible for bringing up a child, then you are more than likely eligible for child benefit, providing that the child you look after is either under 16 or under 20 and in approved education or training. The child benefit payments are made every 4 weeks, and if approved, you'll receive £21.05 per week, or £1,094.60 per year for your eldest child, and £13.95 per week, or £725.40 per year for each additional child. Now, there is no limit to the amount of children you can claim for if you meet the qualifying criteria. However, each child can only be claimed for once. So if you have joint custody of a child and they split their time between 2 households, then only one household will be able to claim the benefit. So that's a very quick look over the basics of child benefit. And if you'd like to know more, there's a link in the description box to the gov.uk website where you can find out a lot more about child benefit, as well as more information on who is eligible and how to apply. Now, just before we continue with today's video, we are thrilled to be launching the Accounting and Tax Academy membership site in April 2021. We'll be posting downloadable resources, tax tutorials, and in-depth courses that you won't find anywhere else. And the best part is, it's absolutely free to join. Our community have already saved over £1 million in tax, and we're just getting started. Click on the link below to register your interest today. When the highest earning individual in a household responsible for looking after a child broadly has a salary or taxable income from all sources of more than £50,000, they will be subject to the high income benefit charge. It's important to note that the high income child benefit charge is applied even if you are not the individual claiming child benefit. So if your partner claims child benefit and you earn over £50,000, you will be liable for the charge. Now, if both you and your partner earn above £50,000, then you can make an election on your self-assessment return as to which one of you pays the high income child benefit tax charge. The way this benefit charge works is, for every £100 you earn over £50,000, HMRC will charge you 1% of the total child benefit you receive. So once your income reaches £60,000, your charge will effectively cancel out your child benefit, as it will be exactly the same. The charge will not increase any further once it reaches 100% of your total child benefit. So, let's look at this with an example. Let's say you earn a salary of £50,000 from your job. You also receive some property income after allowable expenses of £5,000. That has to be declared on your self-assessment tax return. This would make your total taxable income £55,000. You have one child and your partner receives a tax-free child benefit of £1,094.60 per year. So, since your income is £55,000, you have exceeded the limit by £5,000. Now, as we mentioned earlier, for every £100 you make over £50,000, you're charged 1% of your total child benefit amount. So in this case, 50% of your child benefit amount would be charged. That means you, as the higher earner, will have to pay back £547.30 of child benefit, that's 50% of £1,094.60, through your self-assessment tax return via the high income child benefit tax charge. It is your responsibility to inform HMRC that you need to pay the high income tax charge. Failure to do so will usually lead to penalties. Now, you let HMRC know about this through your self-assessment tax return, where you will have to fill in all the relevant sections, including informing them of all of your income sources. If you're looking for more information on self-assessment tax returns, you can check out our full self-assessment playlist by following the link in the description box below. Now, if your income is over £60,000 year after year, you may have discounted child benefit as being something you can take advantage of. However, outside of the obvious monthly payments, there are a couple of extra features that child benefit brings, even if your income means that you will effectively not receive any financial gain from child benefit. Firstly, by claiming child benefit, your child will automatically get a national insurance number when they turn 16. Secondly, by claiming child benefit, you will get national insurance credits. These count towards your state pension, and you will receive these until your youngest child is 12. Now, because of this, spouses should consider which one claims the child benefit. It usually makes more sense for the lower earner to apply for the child benefit, as remember, any high income tax charge must be paid regardless of which one is claiming the child benefit. We have a full blog post about this topic, which goes into even more detail about the child benefit, the high income charge, as well as the forms needed to apply and even how to stop claiming child benefit. Follow the link in the description box to head to our site and read it today. I hope this video has helped you understand how the high income child benefit charge works and has taken you one step closer to knowing your numbers. If you found this video helpful, or if there are any topics you'd like to see us cover in the future, then let us know in the comments below. Finally, make sure to like and subscribe, as this really helps us to get our content out there. This is Matthew Shoughton for the Accounting and Tax Academy. Thanks for tuning in.